Morning, Top Gun here, about 4 a.m. on the West Coast, Thursday, December 9th. This is the YouTube pre-market commentary. All right, let's start off with a little review of Wednesday's session. Very slow session. The stock market sort of drifted higher after Tuesday's huge rally and ahead of a big CPI report on Friday morning. The QQQ closed at 399.61. It got as high as 399.82. So it got up to that 400 level of resistance that I've marked as, if we get a close above that, that negates my bear market thesis that the market has topped. So that level is clearly important. And the QQQ kind of drifted up there, but it couldn't really get over it. And that makes sense. There's no real news, and we have a lot of important data coming up with the CPI number on Friday morning, and then the Fed decision if they're going to actually accelerate their tapering program next Wednesday. So the futures now, one thing I want to say about yesterday's session though was that the bond market sold off. It's TLT, the long-term treasury ETF was down 1.73%. So this means interest rates going up. The stock market didn't take much note of this, but higher interest rates are negative for the expensive tech stocks that dominate the United States stock market because their earnings are primarily out in the future, and higher interest rates mean you discount those earnings at a higher rate, so their present value is lower, so the stock's intrinsic value is lower. Now, the stock market obviously didn't take note of that yesterday as the NASDAQ and stocks in general drifted higher, even though interest rates went higher too. But long term, there is a correlation there. Okay, now heading into today's session, we're looking at the futures down between 35 and 60 basis points. The S&P I just checked was down about 35 basis points, the NASDAQ about 45 basis points, and the Russell about 60 basis points. Europe is also down, marginally a few tenths of a percent, which makes sense to back off a little bit after this huge 3-day rally that we've had so far this week, ahead of tomorrow's CPI number. Now, why does this make sense? Because stepping back, what's driven everything since COVID is this massive policy response from the Fed, this massive quantitative easing, this injection of $120 billion a month into the market every month has just created this enormous bubble. And the Fed now, with Powell turning hawkish last Tuesday in his testimony before Congress, is now sort of saying, and they also announced the taper at the previous meeting, and now they might accelerate the taper. They're talking about that. Pulling that back is bearish for risk assets. So it makes sense for the market to kind of pull back a little bit ahead of the CPI print tomorrow, because if that comes in hot, that's going to just cause Powell and the Fed to probably go ahead with accelerating the tapering program, which and that Fed easy policy then is going to be removed, and that's been the main driver of the bull market. While a lot of people might disagree that's been the main driver, almost everybody will agree that it's been an important driver. Okay, so now stepping back even further into the roadmap at year end, we had kind of a slow holiday session yesterday. We're probably going to get that today, a little bit of a pullback, but I expect another low volume drift. Probably the QQQ stays below 400, ahead of the CPI report again, and the Fed decision next Wednesday. Now, there's 16 sessions left in the year, and really it's just that CPI number and the Fed decision. And so I think what we might have seen the highs and lows for the year already. I think NASDAQ 16,000 might serve as a ceiling, and NASDAQ 15,000, which I talked about, the bulls defending last Friday, might be low, and so we got positive seasonality, but we kind of got bearishness in terms of the Fed and the monetary driver. So we might just trade in that range between 15,000 and 16,000, and it might not be resolved until 2022.